By the time most people realize what's happening in the banking system, it will be far too late. There's new rules, new regulations, and new ways for the bank to steal your money. And we're going to be talking about that today with Lynette Zang. We're up here at her off-the-grid property. Now, what I want everyone to do is ask yourself, do you have a plan in place as we enter what is very well one of the largest, if not the largest, reset in the history of the economic system? Banks are ready to literally lock us out of our money. Do you have a plan? And if you don't, right there down below in the description and pinned to the comments, you can get a complimentary call with Lynette and her team to put together your wealth preservation strategy so that you're ready for everything that's happening with the Great Reset. So you can set up your complimentary wealth strategy call with Lynette and her team at ITM Trading right there down below, pinned to the comments and in the description. So make sure you hit the like button on this video. Give us a comment down below that says Lynette rules. And Lynette, good to see you.
I'm very happy to see you. Good morning.
Good morning. Okay, so I said by the time most people see it, it's going to be too late, right? And there's new laws on bail-in. So give us an update on all these new laws and regulations and these things that most of us don't really realize that's happening in the banking system.
Right. Well, first of all, whenever there's any change, they want it to be almost invisible so that you really don't understand what's happening. But the sudden rush to tighten controls has actually been, I saw it really speed up. I mean, it's been happening forever, but it really started to speed up after 2008. And, you know, and the other thing is not necessarily even actual laws, but central banks use forward guidance and they'll talk about things and then they'll get people to police themselves. Like, at least at this moment, many people don't want to take out more than, you know, under $10,000 from the account because it's going to be reported to the IRS or the government. And, you know, the reality is it's not illegal to take more than $10,000 out of your account at this moment. Now, that could change, but unless those funds were ill-gotten gains or gotten illegally, you have a paper trail for where they came from. Today, they're trying to push through, which probably won't quite happen yet, but they're trying to push through where any account that has $600 in activity or more gets reported to the IRS. So, you know, what's that going to make people feel like? They're going to be more concerned about doing things, even when it's not illegal what they do. But make no mistake, we're talking about the Bailin Laws. Well, part of that, a big part of that was actually enabled with the laws that in Reg D, where they allowed the banks, when you make a deposit into that account, the banks can sweep those funds into sub-accounts that are actually in the bank's name and then use that as collateral to borrow and then, you know, trade with or do whatever they want with, right? Exactly. And people don't realize this, but, you know, anybody can search it, and I've done some work on it. So that's actually what sets up the legality of the bail-in laws. Now, bail-in means that your deposits, even though your perception is that's your money, you're not. You're a lender to the bank. And so you've got the bail-in laws that say that if a bank gets into trouble, if it's a failing institution, they have the right to take those funds and use it for their benefits. Now, mind you, they don't talk about the fact that the bonuses and the buybacks that the Federal Reserve allows the banks to do every year takes money out of the bank. So when they get into trouble, they're going to take your money because they've already distributed lots of gains to their shareholders, to their not managers, it's at a much higher level than that. But the bail-in, that's what it says. They tested it in Cyprus back in 2013. And what they discovered, because at first they just locked everybody out of their accounts and took everything. But then globally, everybody got up in arms and said, but wait, what about deposit insurance? What about deposit insurance? And so they backed off and they took everything above that 100,000 euro deposit insurance. In the US, that's $250,000. But in Europe, it was 100,000 euros. However, even though they left that money in the accounts, it was about 5.5 years before people actually had access to more than a minimum amount of that money. So while they changed a lot of the laws that they put in place around Dodd-Frank to protect consumers, many of which never really went into play, that if they benefited the banks, they never really actually happened. They didn't even finish writing all of the laws and rules and regulations, even though it was passed in 2010. And then much of that has now been destroyed. Much of those investor protections have been completely destroyed. That's really where you have to look. It's those investor protections. But they didn't remove the bail-in laws. So you're very vulnerable. Now you may say, well, what about FDIC insurance, right? Well, understand, when you make a deposit in an account, you're a lender, and that runs counterparty risk. The FDIC has a little bit more than a penny for every dollar in deposits that are actually insured.
Wow.
Exactly.
And not to mention, if there was a massive national bail-in, they wouldn't even be able to cover everyone's stuff anyways. You're talking about a lot of money.
That's the point. And what people don't realize with the crisis that happened in 2008, which by the way isn't over, this is just an extension of it, the FDIC, according to the FDIC, they were one small bank failure away from everybody knowing that they had no money. Mm-hmm. One small bank failure away. So, frankly, your money is not safe in the bank because it's not yours, regardless of your perception. Perception doesn't mean anything in a court of law.
Yeah, it's a hard thing to grasp, but I remember right when the lockdown started, I went to get a reasonable sum, and they told me no. So I said, go get the manager, and I said, I'm gonna close my accounts right now if you don't give me this amount right now. And they said, well, what do you need it for? And I said, it doesn't matter what I need it for. I will close my accounts right now. And then they ended up giving it to me. But at that moment, that coupled with the bail-ins really made me realize, Cyprus was just a practice run. Greece was a practice run for something larger, right?
Oh, absolutely. They have to test the parameters in the waters. How far can they go? And, imagine, because I think a lot of people experienced what you experienced not that long ago.
Right.
Right? And then what did they do? Well, they had a little central bank party where all these central bankers trotted out and told them, you don't have to worry about getting cash out of the bank, because there was a bank run that was happening. It was in the early stages.
And they were talking about it a lot, too, on the news and everything. And they were like, your money is safer in the banks. And they were running it on all the headlines telling you, don't get your money out. You want to leave it in, otherwise it's not safe. They were saying that.
Exactly. And this is a big problem. The bank runs, we've got so many things that are going on right now. But yeah, they want you to keep, your money has to stay in the system. So it's not just the bank runs, but it's also Wall Street, and why the stock market just has to keep going up, because that's what people look at and think everything is okay.
And if people pull, whether it's out of the markets or out of the banks, if enough people pull their money out, then it basically, it's almost like sticking a wrench in the middle of the wheel, and it stops the game, right?
Exactly. And, a lot of what's happened is the massive amount of new money, liquidity, that the central bankers globally, but certainly in the US, have put into the system. First of all, everybody needs to realize whenever central bank prints new money, all of the money that's already out there loses purchasing power value, right? So that is a huge key. And that's why, where you would see it on a personal basis is inflation, right? Inflation really is the loss of purchasing power value. That's what inflation is. And when they keep talking about fighting inflation or we need more inflation, either way that they're talking about inflation, it's garbage because they create it by design. It was built in to the fiat money system, and fiat is, bottom line, it's government money, right? So, it's not just the bail-in, because I also get people that ask me all the time, well, am I going to still get my Social Security check? And, so it's that nominal confusion where people focus on the number.
And if the government doesn't ever really say that inflation's out of control, you can still get your Social Security check, but the purchasing power of that doesn't afford you any type of a semblance of the cost of living that you thought it would, but they still give it to you. But then they just say, hey, inflation is not that bad because, if inflation goes up, they have to rework all the Social Security and all those types of benefits that they're giving out. So, they have a vested interest in keeping the price.
Headline inflation low, absolutely. Right. And for this year, because they couldn't really keep it low, by design, average wages, Social Security, any of that stuff is not intended to keep up with inflation. It's actually, the intention is to lose its purchasing power and have you just accept it, which is what we've done. I mean, I was there in the 70s when we went completely off the gold standard, and Nixon closed that gold window, right?
Just suspended it temporarily for the last 50 years.
It's always temporary. Look at this inflation, right? Suddenly Powell and some of the other central banks are, well, it's more persistent and sticky than we thought, but it's still, it's going to calm down. What they're talking about is the rate and speed of the inflation.
Right.
Some of the prices, yes, will come down because the traders bid them up so high, like lumber, oil, I don't know that's going to come down. But when they get the bid, remember, what was it, April of 2020 when oil went negative?
Right.
The oil contracts went negative, like $35.
Yeah.
I mean, so, this is really a trading mentality and wealth transfer, and there are definitely winners and losers. And when you're looking at the banking system specifically, the central banks, frankly, I hate to say this, but it's true, they're there to support the banks.
Now, Jim Rickards, he calls this scenario that we're discussing, where the banks basically take a hold of your money and they run the bail-in. He calls it an economic freeze in his books. Mm-hmm. And I thought it comes from some fiction book that he had read, but he draws the parallel where everything freezes. The ATMs freeze, everything freezes.
Right.
Is that a scenario you could see ever occurring?
100%. You go and not only that, but it was pretty darn close to a freeze. I mean, was it easy for you to even walk into that bank when
I just started throwing papers, and I was like, no, I'm just joking. But I had to threaten was to quit or to take my money. But yeah, and they told me, they said they'd call me later that day is what happened. I said, look guys, I'm gonna cancel my account. So they said, okay, we'll get it in order and we'll call you. And I didn't answer the initial call from the branch manager, and she left a voicemail telling me that she thought it would be a better idea if I kept my, it was that
Talking you
scenario
out
trying
of
to
it.
talk me down.
And how many people that have gone to wire funds to buy, I don't know, real money gold, where you're thinking this is your money and you're setting up a wire transfer and they're like, nope, nope, we're not going to do it. Nope. I mean, I hope people with all of this realize, because I couldn't walk into a branch office of the bank during that. Were you in a smaller city
Well, I
then?
was in St. George, Utah. So
Right. So
everything
you
was
were,
open,
exactly. You were in a smaller city. I'm in Phoenix. I can tell you for a fact that to walk into a branch office
Yeah, you couldn't even do it, right? Yeah.
You couldn't do it. And then to try and make an appointment to go in was an absolute nightmare, because all you got was, a telephone message, well, if you know your party's extension, one of those. So you couldn't even get a hold of, even if you had a contact there, which I did, right? I couldn't get through to them.
Right.
So when you talk about a big freeze, I want people to remember what it was like back in March and April and May and June of 2020.
Right, and we didn't even have a banking failure then.
Exactly.
And they were still running the propaganda on, Forbes and all these places saying, keep your money in the bank. And so that, that begs the next question about what to do as we wrap up. But that's why, I said, by the time you see it, it's too late in a scenario like this, right? This isn't something where it happens and then you can just adjust afterwards, because they've already enacted the laws to freeze accounts and to freeze your money. And that's why it's so important to have a percentage of your wealth outside of the financial system.
Yeah.
And that's why it's even more important to have a wealth strategy plan set up. So if that's you that doesn't have that, or you want more help with that, you can get a complimentary call with Lynette and her team right there down below in the description and pinned to the comments to set up your wealth preservation strategy to build and maintain your wealth outside of the system. You want to elaborate a little bit more on that as we wrap up?
Absolutely. Because gold is the primary currency metal, and it has been money. Governments cannot dictate gold as money because it's been money for 5,000-6,000 years. And its primary function, it has the most functionality of any financial asset. And that is actually even according to the Bank for International Settlements. But because of that functionality, when they reset a currency, they reset its value against gold. And that's when you get that big overnight reset, right? It's happening slowly since the day you were born, since the day that everybody was born, because it's baked into the currency. But that's what we've seen, even recently again in Venezuela, who has now had 3 overnight resets with loss of value on the official loss of value on the Bolivar of like 99.5%, which also, by the way, anything that is denominated in dollars that you can only convert back into dollars, so like stocks and bonds, ETFs, mutual funds, annuities, those kinds of things. Well, if you have something that can only be converted into dollars, then guess what? They only have as much value, purchasing power value, as the dollar has, which means they lose all of it, which goes back to the Social Security, piece. They can still give it to you. You just can't do anything with it.
Right.
So you want universally accepted real money. Gold's the primary currency metal, silver's the secondary currency metal. And when all else fails, when there's a circumstance where the bank goes, nope, you can't have your money, you have real money in your possession. It's key.
Yeah, and that's, I think, an important thing to understand, because when someone will buy bullion, whether it's silver or gold, a lot of times they'll look at it the same way you would look at a stock or even a gold stock or a mainstream stock or a crypto, and you're analyzing your return.
Right.
What you want to do when you have your wealth preservation strategy of your money outside of the system, you're not buying it to retabulate in 6 months your return. You're buying it on the absolute certainty that the banks have already enacted laws to steal your wealth,
Yep.
and that we're at the very end of a life cycle of a fiat currency system. And you have it outside of the system the same way you have a life vest. When you know that there's no more gasoline or fuel in the plane and you're in the middle of the Pacific Ocean. You don't buy it and then you go back and you retabulate and you sell back on a 20% gain. This is stuff that you hold that hopefully you never need, but every indication points that before we're ready, we're gonna need it, right?
Yeah, 100%. We need it now. I mean, look at, and you can't look at the spot market. That's another thing that people should really be aware of with both gold and silver, because those are contracts. And when they were created back in the 70s, it was specifically to manage your perception of what was happening
And they
with gold
state
and
that
silver.
clearly. We know from the wires that WikiLeaks picked up and leaked through the, I forget what U.S. department. They said they created the futures market to manage perception of gold, right?
Exactly. And, you know, so it's really, so the key in anything, honestly, is understanding the true value, what I call the fundamental value of any asset or any instrument, because ultimately that's where it's going to go. So Eric did the calculation recently, and I could be off a little bit, but at that time, in terms of dollars, we had gold at something like 52,000 an ounce and silver at like 600 an ounce or something like that. And that would be, if they did the reset today at 100% reset valuation, that's the true value of an ounce of gold and an ounce of silver. So at 1,800, 1,700, 1,900, 5,000, 10,000, 30,000, 40,000, it's a bargain. Silver below 30 bucks an ounce, it's a bargain.
So ask yourself, are you prepared for the banks to walk in and claim that your money is theirs? And if not, how can you put a little simple plan together? I highly recommend that you sign up for a complimentary call with Lynette and her team at ITM Trading, where you can put together your wealth preservation strategy call. It's pinned to the comments and in the description. Hit the like button on this video, give us a comment down below, and share this message before it actually happens. So thanks for coming out.
Exactly. I'm really glad to be doing this whole thing with you. This has been really enlightening and a lot of fun, and I hope people do share this, because just because your perception is that you own something, it's a contract other than physical gold and silver. Everything else runs counterparty risk, and it's not yours. When you make that deposit, you're loaning the bank your money. It's not yours. And what are they paying you to take that risk? Nothing. You're taking all the risk. They take all the benefits and all the gains for all this trading that has been set up, because banks have to make money. You don't have to make money, but the banks have to make money. So yeah, you need the gold and the silver. It's your wealth insurance policy, and we all need that desperately right now.
Absolutely. So thanks for watching today's episode. We will see you next time.